All right, where do I begin? What a ridiculous market. All right, I want to talk about a few trades here. So let's start with my put credit spread, my weekly put credit spread that I had opened expiring today. So I had opened last Friday a put credit spread at around 305, 310. Here, let me just go find it here. So if I just filter on the SPY on under executed, I'm going to look for the June 26th put credit spread. So it looks like it's a bit lower here. So there we go. June 26th expiry, 305, 300 put credit spread. I collected 76 cents. I opened it June 19. But then if I look for the other June 26th trade here, if I go higher, so then on June 24th, SPY went way below 300 or 305, sorry. SPY went to 302. So that obviously tested my 305 300 put credit spread. So because there's not a lot of time left, I decided to sell a call spread at the exact same short strike as the put spread. So if we go back to the put spread, I had the 305 300. So basically for this trade to win, SPY needs to trade above 305 come June 26th, which is today. When on June 24th, when SPY was trading below 305, I took action. I sold a call spread on the other side, but I went at the same short strike as the put, the 305, as you can see here. So I sold the 305, 310. I collected $2.10. So from this trade, I collected $2.10 plus the 76 cents here. So $2.86. So that's my total credit received from opening this trade. My max closing price, the max that I'll pay to close this trade, will be the difference between both strikes, so $5. So the max I'll pay is $5. So that means my max loss will be $5 minus 286 that I collected combined. Today I was able to close it for 266. So I sold it for I collected 286, I closed it for 266. I was able to save the trade and not lose money. I can't say I made a profit because I'm sure with commissions I probably spent a little bit more, but I definitely did not lose max loss, which would have been about $2.14 times two contracts, because I had two contracts, and the SPY ended up closing the day at 300. So this trade would have been max loss today, but I was able to save it when the SPY was trading at around 306 today. So two things allowed me to save this trade. I took action on June 24th by selling a 305 310 call spread, collecting $2.10. And then today on Friday, I was able to close it early. Didn't get greedy. I didn't say to myself, wait, maybe SPY could close around 305 and I can actually keep most of the credit received, the 286. I could keep most of it. I decided to get out of it for break even, and I was able to get out for $2.66. So here's the thing, I put a limit order at 270 and it actually got filled at 266. So it actually gave me a better price than my limit order. So yeah, so I was able to save this put spread that got completely destroyed. But now I've got a few others now that aren't doing so well. I've got the July 1st one, which is next Wednesday, at a 300 put spread, at a 300 short strike. So the June 29th one is already closed. I had opened one June 22nd for the June 29th expiry, but I closed it June 23rd for 50%, or even more than 50% actually. So this July 1st one here was the one that I opened on June 24th. I opened one July 1st. So this one has a 300 strike. So it got tested today. I didn't take action on it yet because the SPY dropped hard. So usually when it drops hard, it tends to come back up again the next day. So I'm gonna wait. If it opens Monday lower than 300, then I'm gonna start taking action. I'll just sell a call spread at the same strike as the short strike here. But today, we're Friday, June 26th. There is no July 3rd. Maybe it's a holiday or something. So the only available expiry was July 2nd. So I sold the July 2nd put credit spread at 296, 291. So 296 is my short strike. 5-point wide trade. Collected, I believe, 78 cents or 77 cents. And this one expires next Thursday. This one has a 296 strike. So is it tested? Very close. I mean, we started off the day at 307 when I placed this trade, and now it's only 4 points away from the current market price. So it's not as safe as it was at the beginning of the day, but who knows what will happen next week. It might be a winner next week. We'll see. So these are my weekly ones. Okay. And now these are my older monthly ones that I had open a while back. And so let's look at the July 6th. So the July 6th is a 303,298. So the 303 is tested. I've got 10 days to go. I had a call spread. I added a call spread to mitigate it, to reduce max loss. But because I still have time, I didn't bring the call spread all the way down to 303. I might do that next week. So if the SPY stays below 300 next week, I'm going to bring the call spread all the way to 303. Right now, my call spread that I'm using as a hedging trade is at 316, 321. So I collected several call spreads from this trade, collected several credits. So I collected initially. So if I go to orders, executed SPY, and now we want to look for the July 6th put spread. So this one here is a vertical call. So you can see I initially had a 320, 325 call spread, collected 56 cents. But my put spread here is July 6th, 303, 298, collected 75 cents. So that was my initial trade, 75 cents. But then when the 303 short strike got tested, I sold a call spread at 320, 325. So same expiry, same width between both strikes. But I went far enough in case the SPY decides to come back up, which it did several times to 315, but then dropped back down again. And I collected 56 cents. And then today, I decided to close that one. So I decided to close the 325, 320 call spread. And I opened the 316, 321. And I collected an extra 23 cents on that one. So if I go back to positions, you could see that my July 6th has a 316, 321 call spread and the put spread of 303, 298. So I collected credit twice from the call spread, and I already have credit from the put spread, but I might sell another call spread. I might bring it closer to 303 depending what happens next week to the SPY. So same thing with July 8. I initially had a 305, 300. It got tested, so I sold some call spreads, and today I brought the call spread closer. So if I go to orders, executed SPY, July 8, you can see that I had a 323 call spread, and I brought it down to 317. And I collected 31 cents for that. I have two contracts. And if I go back to positions, I've got the July 10. This one, I started off with 315, collected $1.10, I believe. And my put spread was 304, 299. So all my put spreads right now, the monthly put spreads, are all tested completely. And right now my goal is to reduce max loss on these put spreads. I might just bring the call spread all the way down to the same strike as the put spread, like I did with my weekly put spread that saved me. Because I still have 14 days to go, anything can happen. So I want to take it gradually. I want to bring the call spreads closer and closer gradually, not all at one time. But we'll see what happens next week. So that's what I've got open in my margin account, just doing these SPY put spreads. Now, after these ones close, I'm not going to do monthlies. I'm going to stick to weekly SPY put credit spread. So every Monday, Wednesday, Friday, I'll open a new put spread on SPY. Short strike being at expected move and going 7 days out. So from Monday to Monday, from Wednesday to Wednesday, and then from Friday to Friday. And the reason I'm doing that is based on probabilities of historical prices. There's a 67% chance that the SPY trades above its current market price 7 days later on a Monday. And then on a Wednesday, there's a 68% chance that the SPY trades above its current market price next Wednesday, the following Wednesday. And Friday, there's a 67% chance that whatever the SPY is trading at on that particular Friday, on the next Friday, it'll be trading at the same price or higher. There's a 67% chance of that. And then there's an even higher percentage. There's an 89% chance that it trades 2% lower or higher. So since I'm doing an out of the money put spread, that means that the trade wins as long as the SPY stays above my short strike, and my short strike is already 2 or 3% lower than the current market price, and I already have an 89 or 94% chance of winning. So for example, this is the trade that I made today. The open price was about 307, 306. So I chose a short strike of 296. So 296 divided by 306 is 96, 97%. So I'm about 3% lower. So I'm about 3% lower than the open price. So based on this probability chart, I'm around here. So I've got a 94% chance that by next Friday or next Thursday, the SPY is trading above my short strike. So, but this of course doesn't take, this takes over 20 years of data. So it includes the good days and the bad days and the crashes. So it's a mix. It's not that specific, but in general, I've got a 94% chance that my SPY put spread or my short strike will not be tested on expiration date next Friday. So yesterday's video I mentioned that I wanted to buy McDonald's in my TFSA with the available cash that I've got, 28K. I don't have enough to buy SPY unless the SPY continues to drop. SPY is at 300 now, but if it continues to drop, I might have enough to buy 100 shares of the SPY. I want to buy 100 shares in increments of 100 shares so that I could do covered calls at the same time. So McDonald's, the advantage of McDonald's is to get the dividends. Let's see what McDonald's is trading at right now. 179. So yeah, it's getting closer to the price that I want to buy it at. I want to buy it at around 160, 150. So in my RSP, I've got the covered call on IWM. I had a 149 strike. It's definitely going to expire worthless. The IWM closed at 136 today, and my strike was 149. I actually could have brought my strike lower at the beginning of this week to collect more credit. I thought about it, but I chickened out. Whatever, I collected $38 and it expired worthless. So on Monday, I'm going to sell another call option again out of the money as far out as I can go, collecting a decent premium. And that's the plan. That's the plan really with IWM. I wanted to sell these shares here when the IWM went above 151. I should have done that because it's not really doing anything for me. At least I would have gotten my money back. I don't even think I have enough to buy another 63 shares to complete 100 shares here. How much capital do I have left? I've got 3,782. I don't think that gives me 100 shares of IWM. 3782 divided by, we're at what, 136 I think, gives me 27 shares. So it's not enough to buy or to complete the 100 share for IWM here. And remember, when you buy ETFs with Questrade, there's no commission when you buy, but there is a commission when you sell them. So let's see where I stand on my portfolio. Total equity as of yesterday. So yeah, as of June 25th, my balance is 99,842. That's good. Watch it drop next Monday. All right, so if you have any questions, leave them in the comments section below. And like always, if you can open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them here gives you up to $250 back depending on your deposit. And the other one gives you $50 in free trades regardless of your deposit. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.